Where are we right now in the market cycle? And what does the hype around AI really tell us about the future of crypto? Everyone keeps repeating the same thing. The AI bubble is over. But here's the truth. It isn't the end, and it's not the beginning either. We're right in the middle of a massive expansion phase. And if you understand what that means for both AI and crypto, the next 2 years could completely change your financial future. Think about it. Crypto and AI are moving in sync. Both are high-risk, high-reward sectors. Both attract enormous amounts of money, and both thrive when investors feel confident enough to take risks. When AI stocks push higher, that risk-on mentality spills into crypto. Right now, every signal suggests both markets still have plenty of fuel left in the tank. So let's start with the big picture, traditional markets, because like it or not, that's where everything begins. If stocks are healthy, risk assets like crypto have room to grow. And guess what? Stocks look incredibly strong right now. Fidelity reports that more than 2/3 of S&P 500 stocks are trading above their 200-day moving average. That's not weakness. That's broad participation and internal strength. On top of that, the forward PE ratio is just 18.3. Sure, it's a bit above the historical average of 17, but that's nowhere near bubble territory. That's what we call mid-cycle behavior. Not mania, not collapse. Just a strong, growing market. And for crypto, that's a giant green light. Now let's bring in history. If you compare today to the dot-com era, the setup is almost identical. Back in 1997, everyone was calling the top. They said valuations were insane, that the bubble was about to burst. But here's the thing, the real mania didn't hit until 1999 and 2000. Investors who sold too early missed the most explosive gains. Today feels the same. In fact, legendary investor Howard Marks says today looks exactly like 1997, which means the biggest moves may still be ahead. But here's the twist. This isn't just hype anymore. Unlike the dot-com bubble, today's AI companies are actually printing profits. Nvidia, Microsoft, Google, they're not just running on speculation, they're making billions in revenue. That matters because it means valuations, while high, are grounded in earnings. And that makes this bubble far more durable than the dot-com mania. So how does this connect to crypto? Simple. When AI runs hot, money starts looking for the next frontier. And that's where Bitcoin, Ethereum, and AI-focused crypto projects come in. Institutions are finally opening the floodgates. We now have spot ETFs live. Big companies are building digital asset treasuries, and regulators are laying out actual rules instead of endless crackdowns. In other words, the foundation that past cycles lacked is finally being built. Now zoom out to the macro. The Fed is shifting course. Rate cuts are expected to begin as early as September. What does that mean? Trillions of dollars sitting in cash and money market funds will start flowing back into risk assets. Stocks will rise? Sure. But historically, crypto rises faster and harder. And with the US government openly discussing state Bitcoin reserves, the tailwinds are stronger than ever. And here's where it gets even more interesting. This isn't just about Bitcoin anymore. Ethereum is preparing for major upgrades that will improve efficiency and scalability. Solana continues to push transaction speeds into record-breaking territory. Cardano and Tron are benefiting from the rise of stablecoins. Remember, every time a stablecoin moves on chain, it requires a smart contract. And that means demand for blockchains like Ethereum, Solana, and Tron keeps growing. At the same time, AI-specific crypto projects like Bittensor, Render, and others are creating entirely new narratives where blockchain meets AI. Whether or not they become the next giants almost doesn't matter. The narrative itself is attracting billions in speculative capital. And in crypto, narrative equals momentum. So let's tie it all together. Legacy markets, strong, valuations, high but backed by earnings. AI, driving a generational gold rush. Crypto, positioned as the next big beneficiary. Institutions are buying, regulators are catching up, and macro policy is shifting to support risk assets. Of course, there will be corrections. Leverage will flush out. Weak hands will panic sell. But step back and look at the bigger picture. This is a generational bull cycle. It's not over. It's not even close. So the real question is, are you going to position yourself now, mid-cycle, while most people are still skeptical? Or will you wait until euphoria takes over when headlines scream Bitcoin 200K and it's already too late? Because history proves one thing, markets don't wait, and neither should you.